Ladies and gentlemen, if you own gold or silver, or even if you're just thinking about it, you need to stop what you're doing right now and listen carefully. We are witnessing seismic shifts in the precious metals markets, movements so significant that they could redefine wealth protection for years to come. And the truth is, very few people are even paying attention. When we look at the gold and silver markets today, there's something very unsettling happening right under the radar. The London Bullion market. Association and COMEX aren't just numbers on a spreadsheet. They are the pulse of the global monetary system, the real-time barometer of who's positioning, who's hedging, and who's quietly anticipating a collapse in fiat currencies. And make no mistake, these numbers are screaming signals. If you know how to read them, what's happening right now isn't just a blip, it's a fundamental shift that has the potential to rewrite the rules for wealth preservation in ways most investors simply aren't prepared for. Over the past several months, the LBMA has shown some anomalies in its reported inventories. You're seeing movements in gold that are inconsistent with normal market demand. Large withdrawals concentrated in the hands of a few major players suggest that institutions are quietly adjusting their positions in anticipation of a market event. Meanwhile, silver, long considered the poor cousin of gold, is also moving in patterns that are increasingly difficult to ignore. The COMEX data, when analyzed carefully, reveals that futures positions and open interest are not just random. They're telling a story about the future price direction and about where big money is flowing. Most retail investors never pay attention to these details. They look at the price of gold on their phone, see it up a few dollars, and assume everything is fine. But the smart money hedge funds, global banks, even some central banks are reading these reports in real time and acting on them decisively. When you see a sudden reduction in LBMA inventories, that isn't just supply changing hands. It's a signal that physical gold is being pulled into private hands away from paper promises and electronic claims. And when COMEX futures show unusual contract rolls or spikes in short covering, that's not a coincidence either. It's the market preparing for a move. And the bigger that move, the more people will be caught flat-footed if they haven't positioned themselves. Here's the crucial point. These shifts in the LBMA and COM markets aren't just technical, they are fundamentally tied to a broader monetary environment. Central banks are printing money at rates that are historically unprecedented. Inflation is eating away at the purchasing power of fiat currencies, and interest rates, manipulated or otherwise, are sending distorted signals to investors in this environment. Gold and silver become the ultimate hedge not because people are speculating, but because they understand that paper money will inevitably fail to preserve wealth over time. And the institutional moves we're seeing in LBMA and CLMX data reflect that understanding. These aren't amateur traders making bets, they are sophisticated investors positioning to protect real wealth in a world where fiat currency is becoming increasingly unreliable. What's really interesting is how these shifts manifest in pricing and availability. The COMEX often shows gold and silver at levels that seem tame, even stagnant compared to what's happening behind the scenes in physical markets. Inventories at the LBA warehouses may be declining even as futures contracts remain balanced, creating a tension between paper and physical markets. When this tension resolves, and it inevitably will, the price moves could be sharp, sudden, and unforgiving. Anyone relying on delayed information, casual news reports, or outdated assumptions is going to find themselves on the wrong side of history. This is why it's so critical for investors to understand the nuances of these markets. A drop in LBMA inventories might seem small or insignificant on a daily chart, but when you factor in the size of global holdings, the concentration of gold among a handful of institutions, and the potential for geopolitical or monetary shocks, the implications are enormous. Similarly, COX futures aren't just contracts. There are promises that often don't align with physical availability. A sudden demand for physical delivery can expose the fragility of a system built on paper claims rather than real assets. This is the disconnect that has historically led to price shocks in precious metals. And the signals are appearing again, and here's the reality. Most people don't see it coming because they don't understand the structure of these markets. They assume gold and silver are just commodities subject to the whims of investors who react irrationally. But in reality, these markets are deeply tied to the integrity of the financial system itself. When major institutions start moving gold from London vaults or adjusting positions in COMEX futures, they are not speculating, they are protecting themselves from risks that the average investor can barely comprehend. From currency debasement to financial instability to unexpected crisis that will make fiat money worthless overnight, what we're witnessing is more than just a market fluctuation, it's a warning. The LBMA and COMEX are reflecting an underlying reality that gold and silver are becoming increasingly scarce relative to the promises being made in paper markets. That scarcity, combined with the relentless erosion of fiat purchasing power, is setting the stage for a scenario where those who fail to act may find themselves unprotected when it matters most. And those who are already holding metals are gaining an advantage that can't be understated because they are holding real wealth while the rest of the world clings to paper that is losing value by the hour. So if you own gold or silver, or are considering it, the lesson is clear. Watch the movements at the LBMA, watch the positions on COMEX, and understand the story those numbers are telling. Don't be fooled by short-term price stagnation or misleading headlines. The real story is happening behind the scenes in the vaults and contracts that determine who will emerge secure and who will be left scrambling. History has shown that when paper and reality diverge, reality always wins. And the shifts we are seeing in these markets are a stark reminder that real money, gold and silver, is the only insurance against the unraveling of an unstable financial system. When you hear people talk about investing for the future, they almost always focus on stocks, bonds, or real estate. And yes, those assets have their place. But if you want to truly preserve wealth in a world where governments are printing money like it grows on trees, nothing, and I mean nothing, works better than gold and silver. These metals are not speculative instruments. They are money, real money. They are a hedge against the very system that has been systematically destroying the purchasing power of your dollars, euros, and yen for decades. And if you don't understand that, you are already behind. Inflation is not some abstract concept. It's not a minor inconvenience that makes your lat cost a few cents more each year. Inflation is the slow, relentless erosion of your wealth. It's what happens when the central banks expand the money supply far faster than the growth of goods and services in the economy. And while they tell you that everything is under control, the truth is the purchasing power of fiat currency has been shrinking for years, and it's accelerating. Stocks may rise in nominal terms, but the real value, the value that actually matters in terms of what you can buy, is being quietly eaten away. That's where gold and silver come in. Gold and silver have been used as money for thousands of years, and for one very good reason. They hold value. They cannot be printed at will. They cannot be devalued by government edict overnight. You can bury a bar of gold or silver in the ground, and centuries later it will still be worth something. Compare that to fiat currency, which can be devalued to near nothing in a few decades or even a few years if a country mismanages its economy. When inflation accelerates, when governments go on borrowing and spending sprees, gold and silver are the only assets that consistently maintain purchasing power. People often ask, but isn't gold just a commodity, or silver doesn't pay dividends? They misunderstand the very nature of money. Gold and silver are not meant to pay interest or dividends. Their function is to preserve real wealth, to protect you from the failures of governments and central banks. The paper instruments that promise returns, bonds, cash, even savings accounts are subject to inflation. You may see a balance grow on paper, but if inflation is eroding that balance faster than the nominal growth, your real wealth is declining. That's why owning gold and silver isn't optional in a fiat system. It's essential. Now consider the current environment. Central banks around the world are printing trillions, creating money out of thin air. Debt levels are astronomical and interest rates are historically low or manipulated to appear low. Every dollar, every euro, every yen created devalues the money that already exists. And the impact is often invisible at first. Prices creep up slowly. People complain about grocery bills and fuel prices, but they don't connect it to the fact that their currency is losing value by the hour. Meanwhile, gold and silver react naturally to this reality. They do what money is supposed to do. They preserve value. Silver in particular has historically provided an even stronger hedge during times of inflation because it is more volatile than gold. It responds more aggressively to disruptions in the money supply, industrial demand, and market uncertainty. That means when inflation is accelerating, silver often outpaces gold in percentage terms, giving savvy investors a significant advantage. Gold, meanwhile, offers stability and a long-term store of value, a rock in the storm of economic instability. Together, they form a balanced defense against the erosion of purchasing power. But here's the crucial part that most people miss. You don't buy gold and silver to get rich overnight. You buy them to protect your wealth before the system eats it away. They are insurance, not a lottery ticket. And the sooner you own them, the more effectively they shield your real purchasing power. Those who wait until the next crisis or the next big inflation spike will find that prices have already moved, that opportunities have narrowed, and that they've lost the chance to secure their wealth at a reasonable cost. Timing is essential, and history has shown repeatedly that those who act early are the ones who avoid financial catastrophe. The lessons from history are crystal clear. Every time governments have mismanaged their currencies, gold and silver have outperformed the hyperinflation in Weimar Germany, the collapse of the Zimbabwean dollar, and even the gradual erosion of the US dollar's purchasing power over the last century. All these examples point to the same truth. Fiat currency is fragile, and precious metals are resilient. Stocks, bonds, and real estate can all be impacted by inflation and deflation alike. But gold and silver are different. They are a hedge against the systemic failures of monetary policy, a protection against the loss of real wealth. And it's not just about protection, it's about clarity. When you hold gold and silver, you are forced to confront the realities of money. You see the truth about inflation, debt, and currency debasement that governments would prefer you ignore. You are aligned with the forces of stability and real value, not the artificial illusions created by central planners. This awareness alone changes the way you view the financial system and your place within it. So if you're serious about protecting your wealth, about ensuring that your savings, retirement, and financial legacy survive the inevitable erosion of fiat currency, gold and silver are not just an option. They are a necessity. They are the only assets that have consistently done what money is supposed to do: preserve value, maintain purchasing power, and provide a reliable hedge against inflation. In a world where governments continue to print, spend, and manipulate currencies with abandon, there is no better protection than holding real money. And the more you understand this, the more you realize that this isn't a speculative bet. It's common sense. It's reality. While the rest of the world clings to paper promises and illusions of wealth, gold and silver quietly retain value, waiting for those who recognize their importance to claim their security before it's too late. If there's one thing I want you to understand right now, it's this: the time to act is not next week, next month, or even next year. It is now. Markets do not wait, governments do not wait, and the erosion of wealth does not pause for anyone. And yet most investors behave as if they have all the time in the world. They sit on their savings, watch the news, and assume that the financial system will continue humming along indefinitely. The truth is, the system is fragile, and delays in taking action could be the difference between preserving your wealth and watching it evaporate before your eyes. The signals are everywhere if you know where to look. Central banks are printing money at unprecedented rates, debt levels are staggering, and the promises of future returns are increasingly built on a foundation of sand. The moment that confidence falters, the consequences will ripple through every market, affecting stocks, bonds, real estate, and yes, even fiat currency itself. But those who are prepared, those who hold real money, gold and silver, will have the advantage. They will have the ability to protect their purchasing power when others are scrambling to find it. Investor urgency is not just about making a move. It's about understanding the speed at which circumstances can change. Look at the LBMA and COMEX markets. These aren't just numbers on a page. They are real-time reflections of how institutions are positioning themselves. Large withdrawals from vaults, unusual futures activity, shifts in open interest, they all point to a market that is tightening, a market that is preparing for volatility. And volatility does not wait for the average investor to catch up. Those who delay are left chasing, paying more, and often losing the opportunity to secure real value at reasonable prices. There is a psychological element at play too. Many investors tell themselves, I'll buy gold or silver after the next correction, or I'll wait until prices drop. That thinking is not only flawed, it's dangerous. History has proven over and over again that the market rarely works in a linear, predictable fashion. Prices do not wait for you to feel comfortable. Opportunities are fleeting, and those who hesitate often end up paying far more or missing out entirely. Investor urgency is about understanding that the safe window of opportunity is not infinite, it is limited. And every day that passes without action increases risk. And here's another critical point. The financial system is not just fragile, it is manipulated. Interest rates are kept artificially low. Bond markets are propped up and central banks intervene to create the illusion of stability. On the surface, everything may look calm, but underneath the system is cracking. Inflation is rising quietly. Purchasing power is declining. And those who rely on paper assets are already losing wealth without realizing it. Gold and silver, on the other hand, respond to these underlying realities, not the illusions. And those who recognize this, who act with urgency, are positioning themselves on the side of truth rather than illusion. Timing is everything. The next phase of market upheaval is not a matter of if, it is a matter of when. Political instability, massive debt, currency debasement, and global tensions are all converging. When they intersect, markets can move suddenly and violently. This is not a scenario that happens in slow motion. It is rapid, unpredictable, and unforgiving. Those who wait for certainty will find none. Those who prepare now with real assets are the ones who will survive and thrive. Urgency also means education. You can't act intelligently without understanding what you own and why you own it. Gold and silver are not speculative instruments. They are stores of real wealth. The sooner you understand this, the sooner you can make informed decisions, allocate resources wisely, and secure your position in a world that increasingly punishes unprepared investors. Ignorance is a luxury you cannot afford in this environment. Waiting to learn while the market moves is a costly mistake. The stakes are higher than most people realize. This is not about small gains or incremental returns. This is about preserving real wealth and financial security in a world where governments and central banks are undermining the value of currency on a massive scale. Every delay, every hesitation magnifies your exposure to loss. Every day you postpone action is a day your money loses purchasing power. A day closer to the point where securing real wealth becomes exponentially more difficult. And yet many investors continue to wait paralyzed by fear, indecision, or misplaced optimism. They cling to the hope that the system will correct itself, that central banks will act responsibly, that markets will be predictable. But hope is not a strategy, and optimism alone will not protect wealth. Action informed by understanding and driven by urgency is the only way forward. The window is narrowing. Every market signal, every economic indicator, every shift in LBMA and COMEX inventories is telling the same story. The time to act is now. Do not assume there will be a better moment. Do not assume prices will drop. Do not assume you have the luxury of waiting. The next financial storm will not wait for you to feel ready. Those who act decisively today, who recognize the importance of real money and act on it without delay, are the ones who will emerge secure. Those who hesitate will be left wondering how they missed the opportunity. In the end, urgency is about survival, not speculation. It's about understanding the fragility of the system, recognizing the signals that indicate change is coming, and taking decisive steps to protect your wealth before the consequences hit. The world is moving faster than most people realize. And every day of inaction brings you closer to the point where recovery becomes far more difficult. Do not wait, do not hesitate. Prepare now, act now, and ensure that when the storm hits, you are not just surviving, you are secure. When we talk about the future of gold and silver, it isn't speculation. It's analysis based on history, economics, and the realities of a global financial system built on debt and deception. The risks are enormous, and the outlook is clear for anyone willing to see it. Fiat currencies are on a path toward devaluation. Central banks are trapped in policies that cannot be reversed without catastrophic consequences, and the demand for real money, gold and silver, is only going to grow. Ignoring these realities is not an option. Those who are unprepared will be forced to watch as their wealth is quietly eroded. The first point to understand is that the monetary system is fragile. Governments have spent decades convincing the public that debt doesn't matter, that deficits can grow endlessly, and that money printing is harmless. But the truth is, every new dollar, euro, or yen created reduces the value of the money you already own. And as these currencies lose purchasing power, people naturally turn to assets that preserve value. Gold and silver. This is not a prediction, it's a pattern, repeated throughout history from Weimar Germany to Zimbabwe, and it's playing out again in real time. The risks to investors are not abstract either. Interest rates may rise unexpectedly, inflation may spike faster than predicted, and geopolitical tensions could disrupt markets. Any of these factors can trigger sudden sharp moves in gold and silver prices. COMEX and LBMA data already suggest that institutional players are positioning for volatility. Large contracts are being adjusted, inventories are being shifted, and futures positions are signaling caution. These are early warning signs that the next phase of market movement could be severe. Ignoring them is like ignoring the dark clouds on the horizon before a hurricane. Another risk is complacency. Many investors believe that paper assets are safe, that stocks will continue to rise, that bonds will continue to pay. But these assumptions are dangerous. When the next financial correction comes, it will not be gentle. Stocks will fall, bonds may collapse, and currencies could decline faster than anticipated. Gold and silver, on the other hand, will act as a lifeboat. They may fluctuate in the short term, but their intrinsic value cannot be destroyed by printing or debt accumulation. Those who hold metals will have a secure foundation when everything else becomes unstable. The future outlook is also shaped by global uncertainty. Central banks are trapped. They cannot raise interest rates aggressively without causing debt defaults. They cannot tighten monetary policy without crashing markets. They cannot continue printing money forever without fueling inflation. This catch-22 means that the system is teetering on the edge, and any shock, political, economic, or social, could tip the balance. Gold and silver will inevitably react to these shocks. Prices could spike, supply chains for physical delivery could tighten, and paper markets could be exposed as inadequate to meet real-world demand. Investors need to understand that risk is not only about losses, it's about opportunity. Those who are prepared, who recognize the signals, and who act decisively will benefit tremendously. The future belongs to those who hold assets that retain value, not to those who cling to promises printed on paper. Timing matters. The earlier you position yourself, the greater your advantage, because once the broader market catches on, prices will reflect the reality that has been developing for years, and the cost of entry will be much higher. There is also a hidden risk that many overlook: government intervention. History has shown that during times of financial stress, governments may attempt to control precious metals markets, restrict ownership, or manipulate prices. While these actions can create short-term distortions, they cannot change the underlying fundamentals. Physical scarcity, real demand, and the erosion of fiat currency will always assert themselves. Investors who understand this risk will focus on securing physical gold and silver, not just paper contracts, because ownership of real metal is the only protection against government overreach. The outlook is clear. The forces driving gold and silver higher are not temporary. Debt accumulation, currency debasement, and global economic instability are structural, not cyclical. Every year that passes, the real value of fiat currency declines. While the demand for metals as a hedge grows, supply is limited, extraction is costly, and central banks are quietly accumulating metals themselves. This means that the combination of rising demand and constrained supply sets the stage for significant price appreciation over the coming years. But it's not just about financial risk. It's about human behavior. Fear, uncertainty, and panic can drive markets far faster than reason or analysis. When investors finally realize the fragility of the financial system, there will be a rush for assets that preserve wealth. This rush will not be gradual. It will be swift and unforgiving for those who are unprepared. Waiting for the perfect moment is a mistake. The perfect moment rarely comes. Those who act now, who understand the systemic risks and position accordingly, are the ones who will not only protect their wealth, but may also profit from the chaos that will inevitably follow. In the end, the future of gold and silver is tied directly to the stability of the global financial system. Fiat currencies are vulnerable. Debt levels are unsustainable and central. Banks are trapped in policies that cannot be reversed without disaster. The risk is real, the outlook is ominous, and the signals are clear. Investors who ignore these realities do so at their own peril. Those who act decisively, who hold real wealth in the form of gold and silver, and who understand the structural risks of the financial system, will be positioned to not only survive, but thrive in the turbulent times ahead. The lesson is simple. The future is uncertain, the risks are growing, and the time to prepare is now. Delay is the enemy. Hesitation is costly. Understanding the systemic pressures, the monetary realities, and the signals from the markets allows those who act to secure their wealth before the inevitable reckoning arrives. In a world where paper money is losing value every day, Gold and silver remain the only reliable protection. So here's the bottom line. If you own gold or silver, don't just watch, understand, analyze, and prepare. These aren't just market movements, they're warnings. Warnings that history has shown us repeatedly. When fiat currencies fail, precious metals shine. Protect your wealth before it's too late. Remember, the financial system isn't broken by accident, it's designed that way. And the smart money, they've already seen this coming. The question is, will you